Okay, folks. Well, welcome to the 34th year of the Ohio Fair Lending Coalition, and it's a special month. It's April, and it's Fair Housing Month. And I always wondered why it was that April was Fair Housing Month. And digging back through history, there were three obviously important civil rights bills in the 60s: public accommodations, which was 1963, the Voting Rights Act in 1965, and ultimately the Fair Housing Law, which covered fair lending and equal access to credit. But it really took a real struggle in America to get the Fair Housing Act passed. And it took the death of Martin Luther King, the bullet of James Earl Ray at the Lorraine Motel to motivate a country, not so much motivate a country, but to see the searing riots across this country, and especially in Washington, D.C. That Fair Housing Law really was kind of a shell of a bill. It didn't really have an enforcement mechanism, really relied upon private attorneys to enforce it. It wasn't until 1982 that we got a law that really made a requirement of equal access and put the government's full force and faith behind the enforcement of the Fair Housing Law. So today we have Frank Ford and a number of important guests and a large number of people who've registered for this event, and Molly Chinook, who is our moderator, and it's Cleveland State University, and we're going to talk about fair lending and equal access to credit, which is an issue that has plagued Greater Cleveland for a number of years, and unfortunately it still plagues us. And I don't know if we have any quick antidotes to it, but we certainly have been better at measuring the problems that we have with access to credit. So I'll turn it over to Molly and she can introduce the panel. Thanks so much, Molly.
Thank you, Chip. Hello, everyone. So as Chip said, this is April is Fair Lending Month, and Cleveland State University has been a partner and sponsor of the Vital Communities Conference Series for a number of years now, as we certainly feel, as many of you all do, the importance of this topic. And I am joined today by a number of individuals and experts from across the county on mortgage lending. I am going to go over a little bit of business, how the forum's going to proceed, and then I'll introduce our speaker and panelists, and we will get into the discussion. So all of you are able to submit questions via the chat. I encourage you to do so at any point in time during today's program. However, the discussion today is going to be a little different than we have done with these in the past. So we're going to take these in sort of chunks, in increments around the report. So what Frank is going to share with us today is a lot of information, and we felt it would be best shared with everyone and have a robust discussion if we were able to kind of break it out. So Frank is going to present to us in kind of three chapters today of the report. The first presentation will be on the general findings in mortgage lending across Cuyahoga County. The second chapter will be looking at individual banks themselves and the findings related to that. And then the third will be looking at deposits and the general recommendations that Frank came up with during his look at a lot of data going on across the county. So I'm going to first introduce everybody and allow them to have a couple minutes just to say something about themselves. I'm not going to read everybody's bio. All of that stuff should be available online, and we'll certainly share with that on the website. So first today we have Frank Ford, who is the Senior Policy Advisor at the Fair Housing Center. Frank, a couple minutes just to share with folks a little bit about yourself or anything else you find relevant today.
I think the only thing to add is that this particular presentation or this particular report is being done by me as a consultant, since I am being paid by Cuyahoga County Council to produce the report. I've been doing this research for 6 years and previously just did it because I felt it was important. So I'm grateful to County Council that they were willing to engage me. So that's why it'll say on the front page, when you see it, it will say Frank Ford Consulting, but I am a Senior Policy Advisor at the Fair Housing Center. So I think that's it.
Thanks, Frank. Thank you for the distinction. And I'm going to address everybody in no particular order, just in the order that they appeared on the notice in the agenda. So our respondents today include Councilwoman Cheryl Stevens from Cuyahoga County Council. Councilwoman Stevens, a couple of words about yourself for all of our participants.
Cheryl not there?
Nope, she's there, but I can't seem to hear you.
I was wondering if she's on mute. No?
Doesn't look like. Still can't hear you. All right, I'm going to give you a couple minutes maybe to resolve that. Let's move on to Councilman Mike Polensek with Cleveland City Council. Councilman?
Can you hear me?
Yes.
I represent Cleveland's 8th Ward. I'm the senior member of Cleveland City Council. Born in the Glenville neighborhood on East 120th Street between Oakview and Sellers. So I saw firsthand neighborhoods that were sound and stable, and then neighborhoods that declined. And my mother moved us into the Collinwood neighborhood when I was very young. And I have the distinction of being the co-sponsor of Cleveland's first fair housing law, along with my colleague, Councilman Jeff Johnson, because our families lived on the same street. So we saw firsthand the hand of blockbusting, racial steering, panic peddling, and then the whole issues pertaining to folks trying to get loans and stay in our neighborhood.
Thank you, Councilman. Next up, Mr. Aaron Kinney, who is the Bank Relations Manager with the Cleveland Community Department of Development.
Hi, everyone. Good afternoon. Again, my name is Aaron Kinney. I am the Neighborhood Reinvestment Coordinator and Bank Relations Manager in the Department of Community Development at City Hall. Been with the city for going on 4 months now. Very glad and happy to take this role, diving into addressing lending disparities across the city and looking for ways that the city can be better partners with our banking institutions and our area lenders.
Thank you. Next is Mayor Annette Blackwell with the City of Maple Heights. Mayor Blackwell.
Good morning, everyone. Can you hear me okay?
Yes.
Yes.
Thank you for having me. I'm very pleased to be a part of this important discussion. I am a second-term mayor. I'm actually in my 8th years of mayor of the city of Maple Heights. Again, looking forward to the discussion today. Thank you.
Thank you, Mayor. And we also have today with us Ms. Monique Winston, who is the board chair of the Cleveland Realtist Association.
Good afternoon, everyone. And I am going to leave my camera off because it is somehow merging my picture with a little bit of everyone's today. So I don't know what that's about, but I bring you greetings on behalf of the Greater Cleveland Realtist Association. And I would be remiss if I didn't mention our esteemed national president, President Lydia Pope, who is the national president of our organization and hails from the great city of Cleveland, and also our local board president, Ms. Deborah Bonner. And we are pleased to be here today. This conversation is paramount to everything that we stand for. So we are continuously promoting sustainable Black home ownership. So conversations like this are what we have every day, all day, and it is a great pleasure to be here with you today.
Thank you. We're pleased to have you with us. So we're going to start our first 15-minute segment here. Frank is going to present the general overview for 15 minutes. Then we are going to turn to our respondents. We'll spend another 15 minutes in discussion, at which point I will be presenting questions from the chat from all of you. And then we will move on to each chapter after. So Frank?
Yes, and I just want to confirm, is the presentation visible?
Yes.
Yes.
Good, okay. So one thing that I want to say before I go off this slide, you'll see down near the bottom or the middle of the bottom where it says powered by Neo Can Do. Well, that's Case Western Reserve's incredible data system. And I always want to give them some credit because they are the source of my data. It is federal government data, federal home mortgage disclosure data, but they do some very important things to it. They add a column way over on the far right of the data, which includes every Cleveland neighborhood, and it also has the loans by region. So it enables me to look at the east side of Cleveland alone, east inner suburbs. That's not something that any other researcher around the country can do unless they have a special arrangement. And I've actually not heard of anybody having such an arrangement. So I'm extremely grateful for Neo Can Do, Case Western Reserve, for helping me with the data. This, as Molly said, this is going to be in 3 parts. First part is general lending trends, general housing trends that impact lending or are impacted by lending. Then I'm going to move to looking at individual lenders. And then finally, the last session will be on recommendations. First part, housing and lending trends. So here's the first interesting thing, which was a little bit of a surprise to me. So I looked at 6 years, or excuse me, 6 years of data, and looked at what was happening with Black borrowers in that period. And the interesting thing is that the number of applications from Black borrowers increased significantly. The number of loans made to Black borrowers increased 76%. Number of lenders making loans to Black borrowers increased significantly. The total dollars loaned to Black borrowers increased more than doubled. And the average loan amount increased, which you can see the average loan amount went from 109,000 to about 150,000. So that's very good news. But I think one thing that we need to keep in mind is that there are two objectives, I think, for trying to get access to credit for communities. And the first is the people in those communities. So we obviously want to see an increase in Black borrowers who've been historically underrepresented and under-accessed, but also their communities. And so what you'll see when we look at this a little more closely is, well, first of all, I want to point out that there's a national study that was done by the Pew Charitable Trust, and it found that Black families have fallen further behind in home ownership, and that the gap between white and Black home ownership is wider now than it ever was since 1960. They note 2 reasons at the bottom here: persistence of redlining and the increase in the number of homes being scooped up by investors. We're going to talk about both of those. Now here's looking at it locally. Home ownership is declining in Cuyahoga County from 2010 to 2021. The only area that is not declining is a slight increase in the outer suburbs, but every other area is declining. The greatest decline is in the 2 areas which have majority African-American residents, the east side of Cleveland and the east inner suburbs. So again, you have to think about, so if Black borrowers are increasingly getting loans, the question is, where are they getting those loans? Now, as it turns out, the east inner suburbs is the highest for Black borrowers, but keep in mind that's about 50% Black and 50% white. What I didn't do, and probably would be interesting if I could take the extra time to do it, is to look at the individual communities in the east inner suburbs and see where Blacks are getting loans. But notice the significant number in the outer suburbs, predominantly white, dwarfing significantly the east side of Cleveland. And that if you add the west inner suburbs 141, the west side of Cleveland 211, and the 644 from the outer suburbs, you get 1,000 mortgages in majority white communities, which is very significant. So that's all good news, but it still leaves open a question, well, what's happening though in like the east side of Cleveland where it's 80% African-American? And if you might be thinking, well, maybe there weren't a lot of opportunities to buy homes there, you'll see a slide in a few minutes that certainly shows otherwise. Another thing here that's interesting is that Black borrowers, when they do get loans, are 4 times more likely than whites to be given a higher priced mortgage loan, higher interest rate. That is significant. And then here's where Black borrowers who are getting the higher priced loans. Well, actually, this is all borrowers, excuse me, and where the higher priced loans are going to all borrowers. The largest percentages in the east side of Cleveland and the east inner suburbs, those two. Then it declines significantly as you get to the majority white communities. Sorry. So rejection rates. Blacks, this has been historically true for a long time. I would say it's a little better than it was 30 years ago when I first started doing research like this. It's about a 2-to-1 ratio, both for home improvement and home purchase. About 30 years ago, it was more common to see a ratio of 3-to-1. So over time, that is an improvement, but there's still some questions about that. And here's looking at the same thing, but controlling for income. There are 5 groups here. The low income group on the left, moderate, 4 groups, excuse me. Low income, moderate, middle income, and then high income. Black is the rejection rate, 8.2% for high income, 3.3% for whites. So this is for whites and blacks both who are high income. But notice that the Black rejection rate for high income group, 8.2%, is actually greater than the white rejection rate for middle and moderate income. Sorry, I keep having trouble with my mouse here. Okay, and then last thing, looking at disparities with just access to loans directly, is home repair. And the blue bars are the approval rates for loans applied for home repair loans by region. The highest being in the outer suburbs, 52%, the lowest being in the east side of Cleveland, 20%. And what I've put on the other bar is the percent of African-American population. So what's interesting is that access to home repair loans does tend to decrease as African-American population increases. Now, moving on to a second major thing. I think one of the first major things I pointed out here was that decline of home ownership in the county over the last 11 years. This is another big one. The acquisition of homes by investors is significantly increasing and has been increasing since 2004. And notice that the greatest increase is the east side of Cleveland here, the second greatest increase in the east inner suburbs. And you'll notice that the east side of Cleveland, it's 46% approximately, 46. And the east inner suburbs, that's in 2021, 2020, 46% of all purchases of 1 to 3 family homes were by investors in the east side of Cleveland. In the east inner suburbs, it's about 27, 28%. The outer suburbs and west inner suburbs, the majority white communities, had some increase in investor acquisition, but not nearly as great as the rest of the county. Certainly the east side predominantly. And Cuyahoga overall, it's worth noting, Cuyahoga overall went from about 7% to about 21%. So that's a tripling of investor activity in the county at large. So as homeownership declines, as investors from around the US and the world increase their activity, residential real estate in the county is increasingly coming under the control of people who don't live here. Yet the median sale price of homes, I know we think of Cuyahoga as having a very hot real estate market since COVID, and most of it is true, but there are many areas in the county where home prices are still $100,000 or lower. And this was in 2022, most recent data available. So you can see some of the examples: Maple Heights, Warrensville, East Cleveland. The entire east side of Cleveland, the median sale price is $51,000 in 2022. And then some west side neighborhoods of Cleveland. There are many homes on the market for under $100,000. These could and should be opportunities for affordable home ownership, and this statement was, we don't make loans under $100,000. This is what Councilman Mike White, Cleveland City Councilman Mike, I said Mike White. you were just promoted mayor. No. Councilman Plencic was told in 2022 when he went to a KeyBank branch in his Collinwood neighborhood to inquire about a mortgage loan to purchase the home next door to his home. And I know that Councilman Plencic's going to share that story with us in a few minutes. So here's the dilemma of home prices below 100,000. It's multifaceted. First, that these low prices, relatively low prices, represent lost equity and wealth for the homeowners who bought before the foreclosure crisis when they paid more than that. But on the other hand, when these homes are on the market, they are affordable opportunities for home buyers, but not if people can't get home purchase loans. Meanwhile, investors who are willing to pay cash are buying these homes and converting them to rental. And here's the last slide on this subject. And actually, I think it's the last one in this group, this first presentation. So what I did was I compared the 2021 home sales, which are the red bars, to the 2021 home purchase loans in the 5 regions. And you know, you'll see there's really no one-to-one match. There's no place where every transaction had a mortgage. There are going to be some cash sales, people that can finance something from some other means. But in the outer suburbs, majority white community, it's almost 80% of every transaction had a mortgage. Go all the way over to the right here, the east side of Cleveland, and it's not like there weren't that many homes for sale. There were 4,100 transactions of 1 to 3 family homes, but there were only 914 mortgages. Only 22% of the transactions of 1 to 3 family homes had a mortgage. So this suggests a couple things. Number one is, as mentioned earlier, the high degree of investor activity, investors willing to pay cash, are making up a huge difference here. But it also suggests that this is a missed opportunity, because look at them. This was 2021. The median sale price in 21 on the east side of Cleveland was 45,000. I said a moment ago that it's in 22, it was 51, but here it was 45,000. That's certainly opportunity for affordable home ownership, but people are being basically crowded out by investors and or a bank that says we don't make loans under 100,000. Housing advocates have suspected for a long time that this is happening. And I think that Councilman Palensik's report that he shared with us is really the first time that we've heard it in such concrete terms. As you'll see from data later, I do believe this is not just KeyBank. So I don't mean to call it keep feet. This is a problem across the board, although different banks are doing more to meet that need. And I think that I'm going to stop there because we're at the end of the first part. So Molly, I'm turning it back over to you.
Thank you, Frank. There's a lot in there. And you talked about a lot of forces going on at the end. I think there's a lot of dynamics at play here. I have several questions, but this is the time for our panelists to respond to what's been presented here and to kick off our discussion. So the first thing I'm gonna ask in getting everybody going is, sort of initial thoughts on the not just overall erosion of home ownership in general in many of the communities Frank talked about, but specifically Black home ownership.
Hi, Molly.
Yes, Monique.
You probably knew I was going to come off mute, didn't you?
I was hoping.
So yes, this information is definitely very interesting. And I want to just, Frank mentioned some really interesting statistics. And when we talk about, for example, increase in money lent or given to Black borrowers, obviously holistically on its face, I think that is, good news. But I just always am the one to throw a bit of caution out there as we look at that, because he also clearly articulated that the homeownership rate among African Americans at the city, county, at various levels is continuing to decrease. So I think we have to kind of ask ourselves why, and look at that, because it would almost seem like a contradiction. So for me, I would say a couple of things. I would say one, I think we, the saying goes, a rising tide rises all ships. So if increasing is if lending is increasing holistically across the board, then obviously we're going to rise as well. I also think, based on Frank's information, that we have to ask ourselves, if it's increasing, also at what cost? Are Blacks having to utilize non-bank lenders, which will, could obviously have a higher cost and impact sustainability? And then third of all, I think we have to ask ourselves, when we look at that increase, what are the other non-visibles mainly? So how many of those are given to African Americans who are perhaps in a position to be second and third time homeowners? So are we looking at first time homeowners versus those who are at this for the second or third time? And then how many of those loans to Black people are also from outside investors from especially some of the larger cities who are in a position? So I think when we look at those increase, we also have to keep the holistic picture in mind, especially knowing that the homeownership rate is just decreasing across the board. So that's just always some caution optimism that I want to throw out there.
Thank you. And I think that it's, that's important to note, right? Because on its face, those numbers have increased, but it's the importance of doing this kind of work of digging deeper and seeing how, those increases are playing out, where it's the importance of the work Frank is doing. I would like to ask the panel to think about some of what Frank presented here around really the housing cost burden for Black homeowners at a much higher interest rate in communities that have much more affordable housing.
This is Mayor Blackwell, if I could jump in. I can speak about Maple Heights, and I can speak about Maple Heights because I've spent, prior to coming here, I spent many years in different real estate, and that's in a property tax environment. So valuation as a property tax consultant is something I looked at. And this triennial, I say this not for bragging, I say this for purpose of a fuller discussion around this. We had the highest value appreciation out of 59 communities here in Maple Heights. And I sit on the reinvestment subcommittee that our honorable county councilperson, Cheryl Stevens, heads. And I challenged Mr. Ford, we were talking about not making loans for $50,000. He's changed that to 100, as you can see that the appreciation in home value, the comparable sales, when you look at, you do that analysis, it's changed, and it's changed in Maple Heights. At some point, we're gonna have to get to the specifics of this presentation to break it down by communities to see who the true winners and losers are. We're not winners, but we're not losers. So I want to give this, and I heard my colleague Winston speak to it, the holistic. So holistically, there are some markets doing okay. Maple Heights is doing okay. And we see that in the numbers that we look at. And I do want to give acknowledgement of my staff members that are on the call, our Director of Planning and Development, Mr. Joe Duffy, our Housing Administrator, Shara Thomas, and our councilperson, who's here in the evening, Councilperson Tony Jones. So we are seeing banks that are lending. They're getting loans. Our residents are getting loans. Now, accessibility is an issue because we're closing banks. So the accessibility, you just can't walk to the corner where you got to be more strategic. Where they're located. So they're not on Main Street. Citizens Bank on Broadway closed. I've had US Bank, which was at Southgate, closed, but KeyBank's there and Huntington's on Dunham. So it is that's changed the accessibility, I can tell you. Credit worthiness has been challenging, but in credit to credit professionals and people that have had this conversation around appraisals and credit worthiness, trade lines, traditional trade lines that did not change the picture of the financial credit worthiness of a person has changed. They're taking a look at some other trade lines. That's been helpful. The challenges are increased poverty, fixed income. Our homeowners are a little bit older. It takes them a little bit longer, of course, because they start off at lower wages to get the down payment. But there are some banks, and I don't want to shout them out because I don't want to offend anyone here. Down payment assistance is a tool. It's a tool that's been working in Maple Heights. Down payment assistance is something most banks do provide. That's been, so I would say the revisiting the credit, how you get someone credit worthy, the down payment assistance. Twice a year we do a resource fair. We've got one coming up where we bring in banks and we also we bring in the county, keep understanding what that property tax burden. Financial literacy classes. I can't think of a bank right now or a nonprofit that's not doing financial literacy, helping people know how to access loans. That's extremely important when you don't have the personnel that you have in bank branches, right? That's not there. A lot of stuff's doing online. So there's financial literacy. Nonprofits are taking up that mantle. Some banks are doing it. Cities are doing that, and our various resource fairs. My staff is really on top of that. So we're seeing some challenges, but also our family dynamics have changed. And what do I mean by that? More than a third of the households in Maple Heights are female-headed households. You don't have the dual income, and I'm going to go back to my parents. I grew up on, not far from, I think it was the one council. I grew up on Thornhill Drive in Cleveland. I'm a product of the Glenville neighborhood. Both my mom and dad went to the bank and applied for that loan. These are moms by themselves, so it takes them a little bit longer to get the down payment, a little bit longer to understand that's all involved, taxes and insurance. But we are doing some of those things. So I don't want to leave this presentation as a contributor talking about what's all that's wrong, because there's some things going right. So what we want to do is truly lay out what's wrong and celebrate and get more or expand those things that are going right so that we can change this number. Already, we went from Frank Ford talking about $50,000 to $100,000. Appreciation is happening in our communities. Banks are living in our communities. They're not getting subprime loans. We see that in the data that comes across our desk every day. And I look at it every day. So let's make sure as we continue to participate, we're talking about what's going right so we can do more of that, what's going wrong so we can reduce that, stay on top of the credit review. What more can we do? What trade lines will help them be more credit worthy? Financial literacy needs to continue. Down payment assistance needs to continue, and home repair, which we're going to get to. We are the benefactors of a grant, and then we put money with it. We were able to put $100,000 in home repair assistance, 50 from a county, a CDBG grant, 50,000 from the city. We're going to do that. We did 41 loans. People fixed driveways, garage doors, steps. So I just not to drag it out, but I want to bring all perspectives to discussion. So sitting in this seat, I am seeing success. I am motivated. I'm encouraged about what's been wrong for a long time. Let's be going in the right direction. And I trust it's because of the work that Frank Ford does and everybody in this space. The realtors were very, very, very helpful and helped me understand that escrow was a challenge. Let's talk about the challenge at the municipal level. We had escrow. I mean, that's a barrier. How do you buy a house and it's, let's go back to these better numbers. I'm not saying great numbers, but better numbers. $60,000, but you got $15,000 of repairs. We were asking for $15,000 escrow, and you had to go find the other $15,000 to fix it, plus a down payment. It was the education of the realtors. A partnership between the realtors is essential. They showed to me this is a barrier. We remove escrow as long as it's going to be owner occupied, and that increased home ownership. So let's throw everything on the table and see what sticks, and let's continue to do what's right, making it better, and reduce what's wrong. Thank you.
Thank you, Mayor Blackwell. And I think what you're speaking to is that there's a lot of partnerships and collaborations, and it takes a lot of actors to be involved in these programs and to support homeowners across the county. There are a couple of things I heard here, and first I'd like to turn to you, Councilman Polensek, and have us share your individual story, because one of the things Mayor Blackwell brought up was some of the cases of the personal dynamics that have changed in her community and the changing of the types of homeowners and what she is seeing. But I wanted you to share that story that Frank had written about and mentioned in his presentation, and your personal experience in dealing with a bank very recently.
Thank you very much. I'm glad to hear the successes in Maple Heights. Unfortunately, though, when we look at the data that's being presented, you can see the problems that we're experiencing on the east side. So from a historical perspective, being the senior member of the body, I saw a time when trying to get mortgage loan or attempting to get a mortgage loans was not a problem in the city of Cleveland. Trying to get repair loans was not an issue. But I had a home next door come available. An elderly gentleman lived next door to me for years and years. A wonderful man, passed away. And I thought, well, why not? Why not buy this home? I have kids, I have relatives. I thought this is an opportunity for them. My one son was looking for a home. So I made an offer on the property. It was accepted. And so I went to KeyBank on East 185th Street, which is the bank. I have an account there, and asked if I could get a mortgage from them. And I have good credit. The home I presently own that I live in next door is totally paid off for. And they referred me to a loan officer who the loan officer explained to me, Mr. Polensik, and he didn't know I was a councilman in the city of Cleveland because he wasn't working out of the branch. He was working out of their, I'm assuming their downtown office where they're located at, that we don't make loans under $100,000. And I said, well, wait a minute. That's the entire east side of the city of Cleveland. What are you talking about? You don't make loans under 100,000. I said, I'm willing to put down whatever is required on this home so I can purchase it. What did he do? He referred me to Rocket Mortgage. That's what he did. Referred me to Rocket Mortgage, or what I would refer to as subprime lenders. And so, you know, I was insulted by it, first of all, because it's my neighbor. It's the house right next door to me. So I represent a ward that's predominantly African-American. And so what I see happening and what I'm hearing from my residents is inability to get mortgages, inability to get rehab loans to repair their homes. So I'm getting more calls ever than before, and I'm sure my colleagues are, about people who need to get their homes fixed, but can't get conventional assistance. So they're looking to the city, they're looking to the community development. They're looking for the programs that we offer through the city, how we can help them. I'm hearing the same thing from small businesses who cannot get capital, who cannot get loans to improve their business operation. But going back to this 46% of outside investors coming in, I'm seeing it, it's like a tsunami coming into the city of Cleveland. I've dealt with people within the last year from California, Florida, Turkey, Israel, France. I have never, ever experienced that before. I've never seen anything like that before. And when I asked a couple from France who was buying homes, who I met them at an event up in the Waterloo Arts District, they said to me, you have to understand, Mr. Polensik, homes like this, we'd have to pay 10 times the amount in France or in Paris for a house in this neighborhood. And we could make our investment back here in four years. And it really crystallized for me what was happening here is that, and these folks are coming in, they're paying cash. Like the gentleman I dealt with from Turkey, he bought an apartment building sight unseen. He bought it on the internet. And so from our perspective, then we talk about enforcing our basic building codes. When we're dealing with LLCs, and those of you obviously who are aware what an LLC is, if we have to cite that property, they're cited under the corporate docket. We don't know who they are. We're dealing with a fiduciary agent. And look at the problems we're having in housing court alone, just dealing with that corporate docket. So we've been talking internally, what can we do to pierce the corporate veil on the property owners who own these properties in our city? But there is no doubt in my mind, our folks are being denied mortgages. I experienced it firsthand. The last time I looked, I wasn't Black. I'm a Slovenian, Italian, German, and Slovak. So that's where my roots are from. And so the question is, are they looking at just the census tract? Are they looking at block group data from the census again to indicate these are areas that we're not going to make loans in? And then this was KeyBank, and they're headquartered here in the city of Cleveland. So, and I have in my immediate area, I have a PNC, Key, Huntington, US Bank, and Fifth Third. There's no other section of the city of Cleveland that has this many banks. I have a working class neighborhood, a historic working class neighborhood, where people put money in their banks and deposits, bought cars, again, received mortgages. But that's become history. And so my argument here with the city has been, and I've argued this point with the previous administration, and I'm going to continue to argue with this administration, that we collectively have to partner with the county to figure out where are we going to deposit our funds. We should not be depositing city funds in institutions who don't make loans in the city of Cleveland. That is a given. We cannot, we just can't do that. And my late dear friend, Fannie Lewis, I think about her so often. She often said she believed there was an effort to empty out the east side, to push people out of the east side. And, we all heard it here, and I would sit in her living room over on Star Avenue, and I heard Fannie's arguments, and that's why she would never let the clinic go north of Chester, because she believed there was this mindset to push people out of the east side. But you know what? I've come to the realization there almost is, because if our folks can't get loans, if they can't get out of rent, they're trapped, or they have to go elsewhere and secure a larger mortgage, go farther in debt when they could be buying homes in our neighborhoods. I've seen this wave of folks leave Glenville, move toward Euclid, move toward South Euclid, Richmond Heights, people that we cannot afford to lose because they're wage earners. They contribute to our communities. But I'm seeing this tsunami taking place. And so from my perspective within the council, we have to do some real soul searching here. We have to do some deep dive with the BIB administration to figure out what are we going to do? What action can we take to unveil, open up, have transparency as to what's going on? So I want to thank Frank Board. I want to thank all of you involved in today's presentation, because the numbers speak for themselves. What's happening on Cleveland's east side. We're being decimated by outside investors who are coming and paying cash. Our folks are being denied the opportunity to purchase homes. And then we're seeing rents being jacked up. And I represent, part of my ward is North Shore Collinwood, north of I-90 between Bracknell and Euclid, which according to Howard Hanna, real estate agents telling me that's become one of the hottest areas because of the lake development, I-90, proximity to University Circle downtown. So I see rents being jacked up. I see folks being taken out of leases, which something isn't, maybe someone can comment, where in the past, a landlord wanted somebody in a lease. I'm finding with these new outside folks that are buying homes, they don't want leases. They want month-to-month rental agreements. I don't know if this is where they feel they can evict people faster or quicker, but that's what I'm seeing as well. That's a new phenomenon I've been experiencing. So but you're talking to someone who was denied a loan, who was bankable.
Thank you, Councilman. So we're a couple minutes over time on this response section, but I want to turn to Aaron and Councilwoman Stevens to talk about the kind of county's response and what you're seeing to this, and then what programs or activities that the city that are addressing some of what we've heard.
Hi, this is Cheryl Stevens. Can you hear me now?
Yes.
I want to thank everyone for joining us today. This kind of dialogue is critical to the future of Cuyahoga County. One of the things that we began to discuss as council members is the importance of making sure that we benefit our constituents countywide as much as we can with the dollars we have to invest. And so what we're looking at here is who can best help us assist our residents who are willing to work hard, save their money, and try and borrow to buy homes, which is the best wealth builder for the average American. And so because of that, we began a deep dive a little over 2 years ago at looking at who does what in this jurisdiction. We believe that with partnerships with lenders where they do more than say, we'll do our best efforts. They'll give us some metrics we can measure them by. We will be able to talk with them about what are some of the best ways to help people own homes. It is incredibly important for us all to work together. And so that is why we ask Frank and a series of volunteers, activists in the housing market, to help us figure out what some of the best things are. And you'll see that Frank has some recommendations about how we do our next request for searches of lenders who should be invested with. We know that we collect anywhere from 1.2 to 1.3 billion dollars in real estate taxes in Cuyahoga County. That's a significant amount of money, and we know we'll have to pay a lender something for accepting those deposits for us. But should that lender do something in our communities because of the significance of those funds? And we believe the answer is yes.
Thank you.
Thank you. Thank you, Molly. Thank you for everyone involved with this work. This is Aaron, and thank you for everyone joining on the call. So the city is looking into ways that we can step in and step up and lead the charge in a way that it helps improve the quality of life for our residents. You know, I want to touch on something that Councilman Polinsik said, or just mentioned, you know, residents are calling, families are calling our council members and asking, hey, what is happening? What is going on? Can the city step in and do something? We as a city of Cleveland can't do it alone. That's why we are looking at ways to revise old language in past agreements that don't necessarily work for families and our families in today's market. Things that were agreed upon 10, 15, 20 years ago aren't the same needs that our families are going through today. So yes, I would agree. This administration can touch base with the county and try to come to more of an understanding of how we can approach things collectively. And it's going to take partnership with our banking institutions, our area lenders, and through the county to really make effective policy changes, because that's a piece of it, and a large piece of it. That's going to take some time. We understand policy does it really happen? Those policy changes and revisions doesn't happen overnight, but that is the energy going forward, is how do we make sure language in agreements matches what our families today need. Another part of the focus is using data like what Frank is presenting today to not only tell the story, but trying to get a deeper understanding of what those families are going through. What are some of the pain points and reasons why that a family of color would be denied. That is extremely important. Just as important as the data that we're seeing today is, you know, why does a loan officer make the decisions they make, you know, on, you know, via the company? Obviously, they have their own policy, their own underwriting strategy as a business. But, you know, again, why isn't more of a relationship-based model or encourage the relationship-based model being brought forth? So we want to understand those dynamics as well.
Thank you, Aaron. Okay, Frank, back to you for the next section of your presentation.
Okay, and before I do, let me just say that I did take to heart what Mayor Blackwell said. One of the things was that, you know, that maybe this should be down to a more deeper level. So this is by region, but I can and will look at this by neighborhood and suburb in the county. And I will commit to producing, it won't be a fancy report. It'll be just an email with, a table that will show some of this data by neighborhood and by Cuyahoga suburb. So I'll commit to that. So part two, lender specific, and there's really two aspects to this as well. There's a 6-year review, 2016 to 21, with 7 lenders who have entered into or made commitments called community benefits agreements. And then there's the 2021 data, which I did look at the top 15 lenders in various categories and various regions. So categories would be home repair, home purchase. Regions would be the same ones we saw. We don't have time to go through all this. So I'm going to show you an example. By the way, this is all in the PDF version of this report, which, I will make sure that Chip and Harriet and Nasha have this so they can post it. But just as an example, review of the top 15 lenders to Black borrowers in Cuyahoga County. So this is not by region. This is anywhere in the county, Black borrowers. So this is the top 15. The ones that are in red are the ones with a community benefits agreement. This first section is the loans applied for, and then there's the dollars applied for. I'm just going to talk about the loans applied for. The farthest left is the applications, how many applications were received by each bank, then how many loans did they make, what was the percent of loans that were applications that resulted in loans being made. But then I've added the percent of loans that were higher priced, meaning 1.5% interest rate or higher. So cross country is clearly at the top. So is Huntington in terms of loans made. Rocket Mortgage also, Fifth Third, Bank of America, and KeyBank are down lower. But now what I did is I took this same table. Right now it's sorted by the loans made, and I'm going to show you the table sorted by those who made the highest interest. So when you do it that way, what emerges is those lenders who are doing a significant portion of their loans to Black borrowers that are higher interest would be, the first group is a lot of independent mortgage companies. These are not banks. And unfortunately, that means they're not covered by the Community Reinvestment Act. They are regulated by HUD, but they don't have the same mandate that some of the depository banks have. So I think this is the first interesting thing that I found, is that the independent mortgage companies seem to be charging higher interest than commercial banks. Now, dollar banks up there at 22%. Huntington's at 11%, which is, it's a little higher than the others, but it's not drastically high. Notice that Bank of America and KeyBank, though, to their credit, they did no loans to Black borrowers at a higher interest rate. So I think that's to their credit. Now, what I'm going to do for the rest of this part of this is I'm going to move now to just looking at those lenders that have a community benefits agreement, or some of them refer to it as community benefits plan. And it's a 6-year review. It's not just 1 year. The 7 lenders are these. The top 3, the first 3, Fifth Third, Key, and Huntington, there's something unique about them I want to draw your attention to. Their commitments were made 6 to 7 years ago. So these are the banks who 6 or 7 years ago said, we're going to do a better job of meeting the credit needs of underserved communities. These are also multi-state agreements. This is not just Ohio, it's not Cuyahoga. And I think in the case of Fifth Third, Key, and Huntington, we're talking about maybe 12 to 14 bank or states in their market area. The bottom 4 banks made more recent commitments starting in 2021 or 2022, and here US Bank 2023. So even though I'm going to show you a 6-year review, only these 3, it's really going to reflect what did they do after they said they were going to do something better. These 4 banks have only made their commitment recently. Now, you could also say, though, that every bank, whether they made a community benefits plan or agreement, it doesn't matter. They have an obligation under the Community Reinvestment Act to begin with, to be meeting the credit needs of underserved communities. So I think it's legitimate to be looking at all 7, regardless of when they gave their agreement, but certainly the top three, it's most significant. What did they say? What did they do after they said they would do more? Now, notice also a little note to remind you that KeyBank is the only bank amongst the 7 that has 2 separate agreements. It has this, multi-state commitment that it made to, and that was to the National Community Reinvestment Coalition. But then we know that KeyBank also has a contract with Cuyahoga County for banking services. At the bottom, I've put the year. It's April 2020 through March 31, 2024. We are just really, we've got about 1 year left. So that's why the recommendations when we get to that section will be significant, because the county is starting to think now about what are they going to do a year from now in 2024. So the first section is home purchase lending on 1 to 4 family homes over the 6-year period. The green bar, the green line is Huntington. So here's where they made their commitment. 2016, they went from 705 loans to 1139. Fifth Third made their commitment also at the same time. They declined. They dropped from 705 to 446. The red line is KeyBank. They did improve, 116 to 441. Although, of course, their volume is not as high as, it's about 1/3 what Huntington's is. And then you've got the others down here are pretty flat. They have not shown much improvement. The 4 that have made a commitment recently. So arguably we could see something, and this should be tracked as we go forward. So this is Cuyahoga County. This is the broader 20,000 foot view. And then taking it to Cleveland only. Pattern is similar for the city of Cleveland. Huntington leads everybody with the greatest increase. KeyBank in red did increase from 22 to 103. The dark blue, I should probably not have a dark blue and a light blue line next to each other. So next time I do this, I'll try to fix that. But the dark blue is Fifth Third. They went from 83 loans in the city of Cleveland to, I believe it's either 78 or 80. And either way, they didn't make any improvement. After making a commitment 6 years ago, no improvement in home purchase loans in the city of Cleveland. East side of Cleveland. Notice, by the way, I also understand what Mayor Blackwell said, that we shouldn't just be talking about what's bad. You know, to me, pointing out Huntington, it's remarkable. In most of the cases here, they've outstripped everybody by what they've done with their commitment. So on the east side of Cleveland, we have Huntington going from 48 to 91. We have KeyBank going from, I can't really read it, but it looks like 5 to 30. So they did make an increase, but again, it's about 1/3 of what Huntington's did. Same with the others. The others are all very low in terms of the loans they made on the east side of Cleveland. The last geography I looked at is the east inner suburbs. Again, it's a very similar pattern. Huntington made a commitment in 16. They went from 117 to 237 loans. KeyBank went from, looks like 19 loans to 71, so they did improve. Again, Fifth Third in the dark line went from 82 to 76. So again, they didn't improve, they actually declined. So that's home purchase. I'm going through this quickly because I'm worried about time here. The next group is home repair lending, doing the exact same thing, a 6-year look at these 7 lenders. Now here, there's something interesting. KeyBank had been the largest volume home repair lender in Cuyahoga County by far. And this isn't just amongst these 7 lenders, it was really amongst all lenders. Their home repair lending has declined. There was a drop for a number of lenders here, even Huntington in 2020. And I think a lot of that might have been COVID, that there were less applications for home repair borrowing. So that could explain that. So I'm inclined to think that, you know, ignore 2020 and just sort of draw a line. Where are we at here? It's gone from 556 to 342. Huntington went from 94 loans up to 628, a massive increase in home repair lending by Huntington. Fifth Third started with 54 loans. They did increase to, this is like about 235 here. And then they dropped to 101. Now, one thing you'll see as we move forward, again, this is Cuyahoga County, this is the whole county. The increase that Fifth Third made from 54 to 235 was mostly in the outer suburbs and the white suburbs. Because when you see what they did, and we might as well just go to it right now, City of Cleveland, KeyBank's numbers declined, but not tremendously. Huntington's increased, but they ended up almost identical. Huntington and KeyBank are the leaders in home repair in Cleveland. And then let's go back to Fifth Third I was talking about. They started with 9 loans here, and they ended with 6. So going back again, remember KeyBank or Fifth Third had this significant increase in loans, home repair loans, at least through 2019, but those were not in Cleveland. And as we'll see, might as well go to the next one. They also weren't on the east side of Cleveland. KeyBank's numbers have declined by about half, from 60 to 31. Huntington's loans went from 6 to 21. There's obviously a great need. There's an unmet need for home repair lending here, and my earlier slide showed that. So it's not being met in a great way by anybody, but KeyBank and Huntington do lead in terms of home repair loans, at least amongst these 7 lenders who've made these commitments. And then as you see, the others are again very flat. East inner suburbs, KeyBank's home repair lending started at 110, ended at 79. Huntington started at 13, ended at 84. The dark blue line, Fifth Third, started at 6, ended at 11. And as I pointed out, the others, there's really very little movement. I think, again, probably the 2 striking things that stand out so far are Huntington's significant improvement since it made its commitment in 2016, and Fifth Third's very disappointing either lack of improvement or decline in many cases. And I don't know what explains that, but that's what the data shows. Then lenders, loans below 50,000. And as Mayor Blackwell pointed out, the next time I do this, I am going to do this by 100,000. Although we should keep in mind that with the median home sale price on the east side of Cleveland being 50, this is still a very relevant number for the east side of Cleveland. And maybe what I need to do is do this twice. I need to do it for 50 and I need to do it for 100 going forward, because I certainly agree that I think 100 is where we're moving in much of the county for low dollar loans. So this is the county at large, and nobody's doing a great job here on this category. Even Huntington has declined in the 6 years, making loans 50,000 below in Cuyahoga County. Pretty much everybody's lending is not great. When you go to the city of Cleveland, it's still not great. Huntington ended just slightly below where they started. Everybody else ended pretty much less than where they started. I'm not sure that anybody here, any of the other lenders, increased at all in the city of Cleveland. And then when you look at the east side of Cleveland, now Huntington did improve from 15 to 24, but again, nobody did anything significant. The numbers are very low. And again, the numbers, as I said earlier, this is an area of where, particularly the city of east side of Cleveland, where the median home sale price is 50,000. And I already showed you a chart that showed that there were 4,100 home sales on the east side of Cleveland in 2021, and yet there were only 900 mortgages. So there's clearly an unmet need. And the east inner suburbs, now part of the low numbers here could be that since this is 50 and below, and the east inner suburbs have increased their median sale price, that may be an explanation here. That's maybe a good reason why this chart in the future should be done at least at 100,000 and below. I'm going to move to just a couple more things here. This is lending to low and moderate income borrowers, regardless of geography. This is anywhere in the county over the 6 years. Huntington started with 239, ended with 353. So again, they made a significant improvement. Fifth Third, again, a very disappointing decline from 243 to 150. KeyBank did make an increase from 35 to 105, so that's significant, but the volume is still relatively low. The other banks, again, their numbers are very low. Lending to just Black borrowers by these banks over this 6-year period. Huntington, significant increase from 97 to 177. Pretty much all the other lenders are fairly low. Looks like KeyBank went from 9 to 50. That is significant, worth noting. But again, the volume for all these other lenders is low compared to Huntington. And then the last thing I'm going to talk about is bank deposits. I haven't seen any other researchers do this, but I've been doing it for the last several years, asking the question, how are the deposits being loaned back into the county? And this table shows the top 13 banks that hold deposits in Cuyahoga County, and these do hold 99% of all deposits. There are another dozen depositors, but their numbers are so small, and also, quite frankly, I couldn't fit everybody in a table. So this was about as detailed as I could make it. KeyBank has the largest deposits. This isn't 25 million. You have to add 3 zeros. This is 25 billion. PNC is 10 billion. Huntington's 8 billion, and you can see the rest. The market share of deposits, KeyBank is about a third of all the deposits in the county are held by KeyBank. Now, these are deposits from individuals, from businesses, and from from governments. So they come from a variety of sources. And then this column is the dollars loaned. Again, add 3 zeros, so that's 488 million. And then this is the percent of the deposits that were reloaned back into the county. So Key is 1.93. I think they were the lowest. PNC is 2.29. Huntington is 8%. The average down here is 4.7. The average of all these banks, what they reloaned of their deposits, is 4.7%. So you've got some doing better. Huntington, you've got Fifth Third at 7, JP Morgan 6, US Bank at 4.4. There's a couple outliers here, First Federal of Lakewood and First National Bank of PA. I do not know the explanation why they loaned a lot more of their deposits in the county proportionally. But I think that one thing to point out in KeyBank has said repeatedly over the years since I started doing this research, and that would go back to about 3 or 4 years ago on this particular research, they've said these deposits actually are reflecting more. They reflect deposits that are not just from Cuyahoga County. Now, I guess my view of this is every bank is required to deposit or to report to the Federal Deposit Insurance Corporation what they are counting as deposits in Cuyahoga County. So it's within KeyBank's control to decide how they want to report that. And if they want to report those deposits, I don't see any other way around it to take the numbers that they've reported. Last thing is I noted that in Crane's big headline, KeyBank continues to dominate deposit. Well, I imagine KeyBank is proud of this. And I think you can't have your cake and eat it too. It's, you're either going to be the biggest depositor and dominate or you're not. And anyway, that's the end of this section. And I will stop there and turn it back to Molly.
Thank you, Frank. And you've done an excellent job on time. So I appreciate that and give everybody time to respond. So I know that probably most people want to dive into the last slide and the last bit that you presented. But I have kind of a couple of questions here from folks who've brought up from our audience. And then I have a question myself. So one of the questions was the county help loan program. Is that part of your
Yes,
data?
absolutely. Those help loans are, as far as I know, that anything that was secured by mortgage is included here. And I'm pretty sure that the county's help program is secured by mortgages.
Okay. And then, there was a question about whether or not that loan program allows for investors to take advantage of low rates from these lenders.
I don't know, and I wonder, does anybody share? Is Councilwoman Stevens still there? I don't I don't know if it does, or if it does it limit it to a certain number of units, like investors who are, 4-unit buildings? I don't know.
I'm not sure either, but the program's priority is, the answer can be had from Sarah Parks Jackson. She
Good.
just raised her hand. Thank you, Sarah.
Thank you, Councilwoman. Currently, the program does allow for investors, and I'm going to change that as soon as I possibly can.
With my support.
Thank
Good
you.
answer.
A lot of people will be relieved to hear that. So I want to go back to your earlier slides, Frank, and maybe talk about this disparity in lending for both home repair and home purchase among the banks that you looked at. And hearing from our response panelists on thinking through, why that is, maybe. Are there different programs? Is it a matter of outreach? Do people not first, go to these banks, or, what is the dynamic you all think is happening here where we're seeing such difference?
Can I just point out something that I meant to point out earlier before you even do that may be helpful?
Absolutely.
It occurred to me, and this when Councilman Polensek told his story to me, this is only like 10 days ago. And like I said, housing advocates have suspected this for years. And but what struck me was, we have to think about this. Somebody's at the bank, they're told by the loan officer, we don't make loans under 100,000. They don't say, oh, but go ahead and submit the application anyway. They're not even going to get the application in. So they're not even going to be in this data to even show whether they were turned down. It's not even, I think that's the significance of either having a policy, or let's give KeyBank credit and say, maybe it's not their policy. Maybe the individual loan officers thought it was their policy, but whatever it is, it's a problem. And when you have people saying that, then the door is going to be closed. You're walking away. So anyway, I just wanted to point that out.
Yeah, well, so you're not even getting the chance to evaluate
Submitting an application
on the merits of the application even, right? It's just a no before you've looked at anything.
Yeah.
Really quickly, this is Aaron Kinney. First off, I do want to say and acknowledge that there is some good work being done by our banking institutions. There are a number of outcomes because of there have been more data and information sharing, that now we are really turning a corner, or starting to turn a corner. The job is not done, let's be clear, but there is some really good work that banks are coming to the table and willing to participate to address these needs and really help our families, and especially our Black and Brown families in the city. But I do want to keep in mind, and this is something that people are starting to get familiar with, and I'm sure there's some history behind this, but we have to understand that a lot of it is a commission-based business. Loan officers do work on commission a lot of times. It's not across every bank and every institution, but I am familiar because I used to be a loan officer. I worked on commission, and decision-making, when it has to do with your bottom line personally, when it has to do with the banks and your business that you're working for is bottom line, decisions are made for whatever kind of reason, based out of those factors. So, again, going back to a commission-based policy or business, decisions for whatever reason, these are individual employees that are actually having touch points and everyday interaction with our families.
Molly, and now I want to say something. This is why we are talking above the individual person to leadership at banks, because if this is the way they're structuring how loans are made, people will, Aaron is absolutely right. People will make individual decisions that don't work to the benefit of our communities. And so that is why, as Councilman Polensek said, we must join together as public entities to encourage the lenders who are depositors and active in our marketplace to work with our residents, not only about the mortgage amount, but also the interest rates and the terms. So this conversation is not about, I mean, the impetus for this conversation was the relationship Cuyahoga County has with Key, but it is all lenders we are looking at and talking to. And now one of the things I have to do is I have to go to Health and Human Services meeting that started 25 minutes ago. So please excuse me. And Sarah is still around in case you need a specific answer, but I also want to give respect to our county executive, Chris Ronayne, and his chief of staff, who are committed to affordable housing and workforce housing and how we work together with the folks that are in our marketplace to do better for all of our residents. Thank you for taking the time to let me speak.
Thank you, Councilwoman. We appreciate you joining us for the time you could. I'm going to turn to Monique here. You've been waiting to say something on this.
Of course, you know that, Molly. So I'm always listening attentively to Frank, and he always gives, he counts the beans better than anybody I know, Frank. You do a great job in providing that data. And I think if we look at it once again holistically, I think we'll see that some lenders are doing better than others in some space, but I think it's pretty safe to say that, everyone can use some improvement, right? Across the board. And one of the things I think, dialogues like this are critical, but I'm going to go a little bit further and say solutions are even more critical. We have good conversation a lot of the time. And of course, I am obviously a bit biased, but, organizations like ours, this is what we do all day, every day. We speak, sleep, everything Black home ownership. And there's a report that our organization does on a national level that is the premier document and report when it comes to Black home ownership. And it's the Sheba report, State of Housing in Black America. And I reference that because it also talks about solutions. And I think sometimes we have to go a little bit into the woods and look at the correlation. So there is a strong correlation between, for example, the wage gap and its impact on Black home ownership. You make less, that's going to run across the board, right? There's an impact between education level. There's an impact as it relates to student loan debt and the amount of debt that as a demographic we have more than others. And I think one thing that perhaps I know that we've spoken to lenders about here locally is there is a huge connectivity when it comes to representation or the lack thereof. I want to say nationwide, Blacks make up 4% when it comes to mortgage loan officers and things like that. So representation matters within these institutions to have folks that can speak to the communities in which they serve, that can relate to the communities in which they serve. So I think when we're talking about all of these things, there are definitely simultaneous conversations involving solutions that we should and could continue to have as well. So I just wanted to mention that because hopefully part 2 of this conversation is, okay, with this great data, and I think Frank is going to continue to evolve. He never ceases to amaze me. Okay, so with this great data, what's next? What are we going to do? So just wanted to mention that.
Well, so I think that thank you for that. And what everyone has echoed in some way throughout this conversation is the importance of the data and reporting this out and making it public. And so, Frank, I know that, many conversations with you and being in a number of rooms with you, right? This is born out of your dedication and advocacy over the course of your career and understanding what's going on and sharing that and communicating that publicly. But it speaks to the need to regularly monitor and report out on what's going on. But I have a question related to this lending data, which is, okay, if you go to your last slide that you showed and you've got some really small percentages of lending back into the county. So where are they lending? If they're not lending in Cuyahoga County, then where are they lending? And what do those communities look like? Because to Councilman Polensic's story, right? You turn down right away without any any other consideration, it's not that the people who are applying potentially aren't going to be loans that are going to perform. And so, what other potential options do banks or lenders have where it's maybe not commission based? In the chat, it was brought up about, volume based or models of mortgage lending, that credit unions maybe have that we can look at. What recommendations, and, Monique, you deal with probably the widest array of lenders than anyone here, and understanding banks and what they do in lending. What are other options or models that banks have that could help to increase these numbers? Sorry to put you on the spot there when you're on mute.
Oh, sorry, was that to me? So this goes, and someone asked me, and I was actually looking for the link so that I can put it into the chat for a link to the Sheba report, which is put out by our national organization, which I will definitely do. I think we also have to look at what banks are currently doing holistically. Loan level price adjustments, we might need to take a look at that and how that impacts overall. We recently had a meeting transparently with KeyBank, and one of the things that we talked about is the way things are not all. Hasn't always been that way, and I think city councilman referenced that when he spoke earlier about days gone by. So what are some of those programs that existed in the past that over time, for some reason, seem to have disappeared? Programs that worked with not just our organization, but other organizations to create specific tools to help. A lot of lenders have been reaching out. I will dare to say all of them have been reaching out to have discussions about the special purpose credit programs that are out there now. That's a tool. It's been on the books for 30 plus years. And now that we have, some great hometown heroes in some important places, shout out to our own secretary from Cleveland, right? That is helping to put these things on the map. They've been on the books. So there are many lenders who are reaching out, how can we do this? They've gotten past some of the hurdles that maybe were a bit intimidating, and the fear that these might be looked at as discriminatory. So a lot of lenders have come to us and have talked about how can we do better? What do we need to do in terms of these SPCP programs? So there are vehicles out there. Some lenders are more aggressive than others, and a lot of the lenders that tend to be more aggressive, unfortunately, sometimes are not our traditional lenders, but they are definitely. I think a lot of our local traditional lenders are definitely open to looking at programs like SPCPs now, how they can do better. And I mean, when I reference this, I'm not talking about those that are SPC by name, but when you look at the criteria, they're really not. So that's definitely one avenue that can be explored.
Thank you. All right. So in the interest of time, I want to leave enough time for questions at the end of this last segment. So Frank, back to you.
Okay. And before I started, I do want to address, excuse me, one thing that Aaron mentioned, and I didn't address this in my presentation. I probably should have. It was about 4 years ago that Greater Cleveland Reinvestment Coalition asked KeyBank, Fifth Third, and Huntington, and it was at a conference, I believe, that all three banks were up on a panel and were presented with this idea of what to do about loans that are below a certain amount. Yes. When loan officers are paid by commission, and why would they want to work on a loan that's 50 to 80,000 when they could be working on one in the suburbs for 250, 280,000? And the proposal was, why not have a program of compensation for loan officers that says you get a base compensation as if every loan was at least 100,000. And so even if the loan is 80, you're going to be compensated on a commission of 100,000, so that loan officers will not be turned away from working in the city of Cleveland, for example, and any inner suburbs who might be still struggling with some lower prices. And all three of them, I believe, said that they were doing something. I'm not sure I see the evidence of that. So I think that's something that needs to be really looked at with all three of them. Did they do what they said they were going to do? And because I don't know that the data shows that. Anyway, last part, recommendations for the next county banking services contract, which will begin approximately 1 year from now. I'm going to go through this actually quicker. It's going to be easier than going because it's only 2 slides. There are 9 recommendations. First, the next contract, much greater specificity, have measurable benchmarks, target number of loans by loan type and Cuyahoga region. In fact, I'm going to actually jump to something. I did have one last slide. I just did this morning, so I thought it'd be useful. So here's an example of what was in the contract in 2020. And this was one of the commitments KeyBank made. KeyBank will work with the county to solve the issue that arises when real property does not qualify for a key community mortgage of $50,000 or less because it does not appraise. KeyBank will consider the use of a loan loss guarantee. There's nothing wrong with what they're saying, except there's nothing about it that you can use to then measure what happened. What needs to happen in the future is something like KeyBank shall originate X number of loans each year, X number of home repair, X number of home purchase, and there'll be a certain number in the east side of Cleveland, certain number of the eastern suburbs, so that the underserved communities, it's by type of loan and by underserved communities. That's the problem with the original language, is that pretty much every one of the commitments in the 2020 agreement was just too vague to yield any ability to have a yardstick for measuring it. Now, before I go on, though, I want to say, having said that, and I said this on Monday at a meeting of county council where I presented this research, the county deserves a lot of credit for having brokered this agreement in 2020, because, and also mentioned that the city of Cleveland in 1991, Mayor Mike White, city was the first city in the country to do one of these bank lending agreements where it said, you know, we're going to give you our deposits, we want something in return. City of Cleveland is the first city in the country to ever do it. Cuyahoga County in 2020, I believe, is the first county government to ever do it. So notwithstanding the fact that, yes, the commitments could have been more specified, it's just a huge step forward. The county government got this agreement, set this policy, and the way they've gone about it, which you're gonna see in these next recommendations, really deserves a lot of credit. So, but the next time around, it needs to be more specific, with very specific target numbers of loans so that that can be measurable. The second, commitments from banking partner are legally binding, not merely best efforts. The language in the contract, the section that deals with KeyBank's commitments, says they will use their best efforts. That's really, there's nothing you can do about that if they don't do it. Number 3 says consequences for failing to meet benchmarks. Could be termination at the most extreme, could be penalties of some kind, or it could be exclusion from future bidding. Number 4, weigh the past performance of the partner bank that you're considering in meeting credit needs by loan type and by Cuyahoga region. 5, banking partner must describe the resources they will commit to marketing and staffing to meet the benchmark. So it's one thing to say, well, we're going to do X number of loans next year, next 2 years. But what about the staffing? Do they have the staffing to do it? Do they have the marketing? Are they going to be reaching out to Glenville, Slavic Village, Maple Heights? What effort are they going to make what money and resources are they going to put in to make sure that their efforts are going to reach people? Number 6, required disclosure of branch closings. The past 5 years, any branch closings, and any future plans for closure. Number 7, continue to provide, and this is something the county should be applauded for, certainly specifically county council, to continue to provide through the council's reinvestment advisory committee a transparent process for reviewing and monitoring the performance of partner banks and other lenders. So this committee, which is chaired by Councilwoman Stevens, has been meeting throughout the last 2 years. It has representatives from housing advocacy organizations. It has public officials, several mayors. Mayor Blackwell is one of the mayors on this. So it's not just county council people, it's people who have they're stakeholders. And I actually applaud the county for, county council for creating that 2 years ago, and I certainly recommend that they continue it. I have no reason to believe that they won't, because I believe that Councilwoman Stevens is a strong believer in that. And that creates a very transparent process. By the way, every meeting of that advisory committee is on YouTube. It's live and recorded. Number 8, when evaluating commitments and benchmarks for the next contract, solicit, as was done in 2020, input from the Greater Cleveland Reinvestment Coalition, county housing stakeholders, and other housing and community development practitioners. Number 9, continue to conduct annual research on lending activity in Cuyahoga County and continue to make that research publicly available to residents. Well, you could say this one is self-serving. Yes, would I like to continue to do this and be paid for it? Sure. But the truth is, I think it's more the commitment to do it, whether I do it or whether somebody else does it. I've certainly provided at least some sort of template for what people might want to look at. And that template is evolving because every year I keep adding things that I didn't think of. And I will be adding things today, or, from what I've learned today. So I'm done, Molly. I'm turning it back over to you. And I can show either one of these slides as necessary.
So I just want to say, from a research standpoint myself, Frank, I don't think that's at all self-serving. I think that is actually, as I've peppered throughout this discussion, that having the information is necessary, and making it publicly available is critically important. Tracking it over time and having everyone have baseline and foundational understandings of what's going on across the county, I think is immensely important. So I would not say you're being self-serving. So this is an interesting set of recommendations. I would first like to turn to Councilman Polensek, who's had his hand up for a while, and allow him a chance to respond.
Thank you very much. Can you hear me?
Yes.
Frank, you mentioned, obviously, you presented your findings to the Cuyahoga County Council. Have you had the opportunity to present your findings to the BIB administration at all?
I sent the Mayor Bibb and members of the cabinet level. I sent them the PDF version, which is the full version that has everything, all the slides here, plus a few, 10 pages of narrative. I did send that to them. And I think that would have been around the same time that I sent it to Council President Griffin and members of council. So when you got it, which was maybe 10 days, 2 weeks ago, somewhere around there. So the answer is yes.
Okay. What I would strongly suggest is that you make an official request to make a presentation to City Council. I think this is going to be very helpful for us to see the much bigger picture, because obviously we invest Cleveland dollars. We invest the dollars we receive, including the ARPA funds that we have received. So the fact of the matter is that we do have leverage. Now, again, is it leverage against an institution that has 33 billion? I think that was the figure. Was it KeyBank 33 billion? Maybe it's a speck in the sand when you compare it to that. But at the end of the day, what it is, it's also it's publicity. It is an indication of who's making loans in our city and who isn't, and where we're going to put our funds. So there's a PR issue here for a bank, for a major institution, because if they want to walk the walk, then you better be prepared to talk the talk and do what you say you're going to do in our neighborhood. So I would, and respectfully ask you to send something to the council president requesting to make a full presentation to Cleveland City Council.
I will do that. Thank you.
And I would just have a question for Aaron as well. Aaron, obviously you're a new guy on the block, but I mean, has the administration taken this issue serious as it pertains to the Community Reinvestment Act?
Absolutely. During the CDBG budget hearings a few weeks ago, Councilman, we did present data through HIMDA, which is the same source that Frank is using today. We presented a one-page community reinvestment snapshot for banks that submitted to be eligible bank depositories for the city, coming up through before I joined the team, that RFP was put out. But we did review those 3 lenders that submitted, 3 banking institutions that submitted, and presented that to council.
Thank you. And furthermore, Aaron, you had indicated you were you work for a bank or financial institution. What can you indicate? What are the commissions on a mortgage loan? I mean, does it vary for that dollar amount? I mean, is it a set number? What is the commission? Just to give me some idea, or all of us some idea.
Well, actually, Councilman, I can't give specifics. My division served on more commercial lending and small business lending. My division actually specialized in healthcare practice finance. So I wasn't a mortgage loan officer at the time.
Okay, thank you very much.
So I would actually like to ask maybe the respondents also, in thinking about this, and Frank, some of the data you've looked at, we've talked about homeowners, we've talked about this as residents buying homes, but I'm also wondering about, as you just brought up here, Aaron, the commercial side of this is the folks who also can't get small business loans in the city of Cleveland, right? And in our neighborhoods and along some of our commercial spaces that service our residents as well.
Absolutely, Molly. So a part of, and a big piece of what we are looking into is more commercial and business loans with our lenders as well. So there are 16 banks that operate or have business operations and bank branches in the city of Cleveland. And, a lot of those dollars that circulate are, on the business side and commercial lending side of things. We don't, through HIMDA, through the HIMDA database, we don't have numbers or metrics on those particular topics, but we are working with some of our banks, and I get calls just about every day from, again, some of our institutions saying, hey, how can we play a bigger role, and where can we help? Can the city lead in a certain direction? We'll come up and follow. So I'm so grateful to have those conversations with some of our institutions and look to continue that.
I mean, I think it connects back to, what Monique was saying of being, behind in wages and, creating in a business environment where our residents can become entrepreneurs, open up their own businesses, right? Participate in the business life of the city as well. And I wonder if it's this difficult to get a home mortgage, how difficult it is to get a business loan as well.
Molly, sorry, Aaron. Molly, that's an excellent point. And I think for me, as passionate as I am about homeownership, it's as equal when it comes to entrepreneurship. And I will tell you that there is a funding and capital gap for entrepreneurs of color as well. So again, that's why I say sometimes we have to step back and realize there is a much larger picture here, but you are absolutely correct. And the numbers would be very synonymous.
Yeah, a similar pattern showing here. So other respondents here, your thoughts on these recommendations, and considering that, as Frank said, and the date is March of 24, where could we stand on some of these recommendations? I don't want to ignore the fact, I'm sorry, that Sarah has her hand up to speak.
Is that my open? Thanks, Molly. I had actually 2 things. Frank, I'm glad you said you were going to do a deeper dive, because as I looked at the charts, like for the 3rd time, because I was on during the council session and today, and I think one other time. I'm just wondering, if possibly the charts could be turned into percentages, I like to see numbers. And one of the things I noticed with Huntington, it always started out high and went higher. And I just wonder, quick calculation, they might have doubled, but somebody else tripled. So how are we looking at that, even though from a chart standpoint, they might have gone from 117 to 237, but somebody went from, I think I had 19 to 71. From a percentage standpoint, I think that's going to be different, and I'd like to see that. My other question or comment is, of the lending institutions, and this is from personal experience, when I bought my house 20 years ago, I was sent to a private mortgage entity because the banks weren't doing VA loans. So I had to go to a mortgager to get my VA loan. A bank was not an option. So I'm wondering how many of the mortgage loans that are actually being done by the mortgage entities are VAs or FHAs, because our conventional lending institutions aren't certified or whatever they have to be to process a VA or a FHA loan. Thank you.
Yeah, and there is a data field or column in the HMDA data. I believe, I don't know if it specifically says whether VA or FHA, but I believe that there's a data field for that, something like that. And so I'm being a little bit vague because I'm afraid of saying something I'm not 100% sure of. But I think it will be possible to do that, to take a look at that. I was also giving some thought to your earlier part of that, thinking about my charts, my 6-year charts, that when I go off on the right, where let's say KeyBank went from 35 to 105 over 6 years, that over on the right, in parentheses next to that 105, could be a % increase or decrease. I mean, that's possible. I'd have to think about whether does it get a little messy, and how I'm always trying to be careful that I don't create things that are too convoluted. Or it could be it could be something separate. So anyway, Sarah, I'm going to give some thought to that.
Thank you.
Yep.
So this conversation with some of the recommendations, but also what we've discussed today about the potential for first-time home buyers, the engagement of banks, and Sarah's on the call, so I can't help but harken back to the mortgage foreclosure crisis in the county, and when the group of housing counseling agencies came together to help address that, in looking at turning to those agencies as well in working with the banks, that if residents go through their counseling programs and qualify, that they will be a stronger consideration irrespective of loan amount for consideration of that application. And working with what I think is a really strong system of housing counseling agencies and that experience in the county. So for any of the housing counseling agencies that might be on the call. But I also want to go back to something that somebody else said. Frank, you talked about that Mayor White's administration and now the county are leading in these requirements with banks. And so as important as this work is to Cuyahoga County and the residents of the county, and for the leadership of the county to understand, this is also, and I've heard this in interviews that we have done for some research projects here at CSU from across the country, that, Cleveland always does some really interesting things. Cleveland is always leading in this, and Cuyahoga County as well. And that what we do here and the precedents that are set here can be used by other communities across the country who may be experiencing these same deficits in lending and their residents' ability to get mortgages, so that beyond just impacting our own residents and having having strong impacts for other communities that look to Cleveland and understand that a lot of times Cleveland is leading in this area, and I think we forget that. And that's
Oh,
thanks to all
yeah.
of you. So we have about 10 minutes left, and between all of the panelists here, I'd like to give each of you a last couple of minutes to kind of share with the participants remaining on the call about how we go forward from here.
Really quickly, Molly, thank you for the opportunity. I would like to share my screen for just a moment. And I know we're looking at Frank's report here.
I can stop screen sharing.
Okay, thank you. Thank you very much, Frank. But I think this will help identify and clarify a little bit of what Councilman Polincic had asked me directly a few moments ago. And then I know there were some comments in the chat looking at a more holistic approach to what some of our banking institutions are doing. So I would like to just give an example of what this administration is trying to really use data as a tool to help us move forward. Can everybody see my screen?
Yes.
Okay, so this is a community reinvestment snapshot. Again, just really important to note that this is the same source that Frank has used through HIMDA database. And Frank and I have actually touched base on some of these metrics that I'm sharing with you today. But this tool will help us identify, again, some of the good things banks are doing and some of the attention that should be highlighted through Community Reinvestment Act. So the Community Reinvestment Act takes a look at holistically what a bank does and how they perform. But we also identify, and this is one of my favorite charts on info chart, pieces of information on this snapshot is the bottom left-hand corner, which is loan approval by Cleveland area. This is where people, I think, really will have some interest in knowing where banks are doing business and more importantly, where they're not doing business within the city of Cleveland. Can't speak on Cuyahoga County, but within the city of Cleveland, this is where we really are drawing attention to. And this is what some members of councils, Cleveland City Council, really want to discuss during CDBG budget hearings. We also included some of the denial, the loan denials within the city of Cleveland. And then we also included the Cuyahoga County denial rates as well. This is just an example at JP Morgan Chase and them presenting their numbers with us and us in combination with HIMDA. But our intention is to fulfill something like this with all 16 banks that do business in the city of Cleveland. So I hope that helps really get a basis or a foundation of how we intend to move forward, and especially in partnership with the county.
Can I ask Aaron if is this kind of information something the city is going to make available, publicly in its deliberations?
That is the intention. All things out of community development, I can't make a move actually without it being public and being publicly available. So if anyone wants to request information from my office, you just put in a public records request and we will make those necessary moves.
Does it have to go to the law department?
That is through the law department, correct?
Yeah, I've made a public records request, as you and I discussed. That's been now 3 weeks ago, and I've never heard anything back from them. So I'm a little concerned about saying that people have to go to the law department, as opposed to just making this available on some regular basis, broadly broadcasting it.
Yeah,
that's my recommendation.
Okay.
Well, by law, unfortunately, all public record requests have to go through the law department, but you're right, it should not take 3 weeks. And anything that is developed by the city using city dollars is public record. So it has to be public. It cannot be confidential. It has to be public. But it shouldn't take that long for you to get that information.
And Aaron, could you clarify? I think I know the answer to this, but the numbers in the snapshot are not numbers the city has researched. That's just what the bank reported to you, right?
Some of the numbers that are indicated in the snapshot are what some of the banks reported to us through their affidavit submission. But we really try to rely more on the HMDA data information that is publicly available, as opposed to relying on some of those metrics. So there are pieces in the snapshot that are just from the banks themselves.
Okay.
Okay. I'd like to continue with our time for each of our panelists to sort of wrap up their thoughts on moving forward.
Well, I'll start or continue. So again, I think this was a good start. I am very much solution focused, and obviously to Frank's point, I'm going to sound like I'm a little self-motivated here, but for next steps for anyone specifically in the in the lending space, whether it be or in the city county space that is interested in working on solutions, I really invite them to reach out to us. When I mentioned at the onset of the call that as an organization we're the and African American Real Estate Association in the country, and so Cleveland has a rich history within the organization. The organization was founded in 1947, and Cleveland was, not far behind. And, you have a national president out of Cleveland. But, Molly, you mentioned housing counseling. We have NID housing counseling agencies. We have the Sheba report. But more importantly, we have boots on the ground, real estate professionals, agents, brokers, title companies, appraisers, because obviously we didn't even get into the discussion about, appraisal biases, but holistically, we want to work to come up with solutions, and we're lender agnostic. We just want everybody to get it right. And so again, my next step and my appeal would be to reach out and let's all collaborate and partner on this together.
Thank you. Councilman Palentek?
I thank again all of you for participating in this today, and above Frank for your research. It's been very helpful. I would encourage again for a full presentation before the body so we could really understand. I was here in the 90s when the White administration took the action they did, but unfortunately, as Frank pointed out, there wasn't the penalty provisions. There wasn't, if you don't do this, what's going to happen to you? So. And under the previous administrations, nothing much has happened. So I'm looking forward to the Bibb administration taking a more proactive approach in dealing with this section. It just jumps in your face. How can you deny what's happening in the city of Cleveland? It's there. The statistics speak for themselves. Our folks are being denied access to mortgages. They're being denied access to rehabilitation loans. And again, small businesses, which are not in this indication or this report, they're being affected as well. And it's having an adverse effect on our stability of our neighborhood. So there has to be change in 2023. Thank you.
Thank you. Mayor Blackwell.
I just want to say this is probably one of the most appreciated conversations I've had around this subject. I do want to say there are Black and poor people everywhere. I am a product of Glenville, Cleveland. I moved to Maple Heights 20 some years ago. All of us are just a couple miles from being Cleveland, our central city. But Black and poor people everywhere. So we want to get it right in Cleveland, but we want to get it right in Maple Heights and all the other cities that are represented on this call today. What I've heard, I've been encouraged. There's a commitment. I don't care if you live in Cleveland or out here, if you're an activist or a realist. What I've heard today, and I'm encouraged by the commitment that's shown on this call, the knowledge that's been shared. There's some really smart people that come from various. I first started off in banking. I spent 8 years in banking. I used to work was a Ameritrust. I'm dating myself. I was a safe deposit clerk and worked my way up to installment lending, direct and indirect lending. So I have a banking background. I have a tax background. And so this comes from various knowledge. And I think many people have varied backgrounds that will really contribute to, again, not just the problems, but the solutions. We can spend a lot of time talking about the problems. We have been very effective, I believe, as an advisory committee, and now we're looking for solutions and hopefully implementation. I'm also encouraged by the willingness. So the commitment, knowledge, and willingness on this call, and not separating ourselves by where we live, central city or suburbs, are going to get us to where we're trying to go, because Black and people of color and poor live in this county all over the place. And so we're affected in many ways But this group here says that we are on our way to implementation. We're collaborative and we're thinking. I don't think anyone was pointing fingers at anyone. I think sometimes people even say, well, you know, there's a split. No, there isn't. The fact that people put this kind of time aside to have this discussion, everyone on here, whether they spoke or not, or a panelist, really has something to contribute to this conversation and to the solutions that are closer than we think. Thank you so much.
Thank you, Mayor. I think that's a great way to end today's session and panels. So I will say that, you know, I know that the Ohio Fair Lending Coalition and Vital Communities Conference Series is committed to continuing to explore this topic going forward. And Frank, you continue to do this research, and we will, you know, continue to host sessions on it. And certainly it's something that Cleveland State continues to be interested in providing discussion space for the community to talk about these kinds of issues. So, Chip?
Hey, thanks to all of our panelists, Frank, for your research. A long, long haul on this issue. And the only thing I would raise is the bank regulators. We saw a flurry of activity when the bank closed out in California. And they do have great power over these banks. And I think that one of the efforts I noticed in the chat, there was a comment from the FDIC. I think bank regulators can have a real impact on behavior of banks. And I hope that we could, along with our county and our city efforts, use the bank regulators to make an effective use of providing equal opportunity to lending. We look forward to having our next forum. Look forward to everybody. Thank you to all of our supporters. Thanks to our Vista, Nasha, and to all the people who care about this work. Thank you all, and goodbye this afternoon.
See ya.
Thank you, Frank. Thank
Yeah.
you, Chip,
Thanks, Frank.
everyone.
Hey, yep.
Okay, take care.
Thanks, everyone.
Yes.
Stay safe and healthy.
Thanks, Mike.